Hey there, and welcome to my very first interview. Today we have a very special guest who will be sharing some nuggets with us on why it's so important to get a pre-approval before starting your home search. Today we have Anthony Quintanar with Franklin Loan Center. Thank you so much for being here with me today, Anthony.
Yeah, thank you for having me.
Of course. Well, I know you and our clients know you, but they don't know you. Can you tell us a little bit about yourself?
Yeah, so I'm a senior loan officer with Franklin Loan Center. Been in the mortgage industry a little over 4 years now. Have my background and degree in economics and finance as well from the University of Hawaii. So, we help anything
Hawaii.
from
That's
from
awesome.
go Bows, as we say. Yeah, and so we help anything from first-time home buyers all the way to investors. So really anything with real estate and investing we can assist you with.
That's great. Well, I'm going to go ahead and ask you a few questions just to kind of help them out understand more of the home buying process and what it takes to get a loan and all that.
Yeah.
Ready?
Ready.
Cool. Awesome. And so my first question is, what is the difference between getting pre-qualified and getting pre-approved?
Okay, so being pre-qualified and pre-approved, there's a slight difference, but it is a huge difference. Pre-qualified is simply taking an application down, giving verbal information, right? So it's not so much in-depth on what you may qualify for.
Yeah.
When you get pre-approved, this is providing what we call STIPs, is your full W-2s, tax returns, pay stubs, bank statements, and on top of that, we take a further in-depth look to what's going on in your credit. And then here at FLC, we actually run it through our overall processing. So you're getting a fully underwritten pre-approval rather than taking a guess, maybe I may qualify for this.
Yeah, it's just like, guess what kind of work around here instead you really know where you're looking at.
Exactly.
Got it. And so I know you hit a little bit on this, but why is it so important to be pre-approved?
Because essentially when you're putting an offer out, you want to make sure that your offer is set in stone. You want to play a guessing game while you're going into it. Maybe my offer goes through, because at the end of the day as well, working with a strong agent such as Julie, you want to make sure that you have all of your ducks in a row, because eventually, if you don't have that, it looks really bad as you want a buyer and the agent if your deal doesn't go through. Yeah,
and especially now a lot of sellers are looking at pre-approval letters, making sure that you actually have pre-approval letters versus just being pre-qualified, right?
Exactly.
Yeah, so great. And how long does it take to get pre-approved, and what are some of the documents needed to begin the process?
Yeah, so me personally, I can get pre-approvals the same day, and really it's just determined on how fast you get me your documents, right? If you're delaying on getting me your W-2s and pay stubs, the longer it takes to get pre-approved. But if you send over those all in one great package, I can do it right there and then. Honestly, it takes me about 20 minutes to put a file together.
Nice, 20 minutes. That's great. You guys hear that? Great. And for those who have like student loans or a car payment to pay off, will that prevent them from qualifying for a loan?
The answer is no. You can still qualify, believe it or not. So don't disqualify yourselves by having a car payment or a student loan. You might not qualify as much. Typically, every $100 in debts typically takes away from about $10,000 in purchasing power. So if let's say you have a $200 car payment, you might not qualify for the extra $20,000 if you didn't. But either way, you're still going to be able to qualify.
Yeah, which is great, because I know there's that whole misconception out there of, oh, I have like a loan, I can't buy a house. So that's really good to know.
Exactly.
Yeah. And many people think that their credit scores will drop drastically if they get an inquiry. Is that true?
That's also another misconception. So when you look at your mortgage credit report, right, there's about 10 different types of credit reports to keep in mind. There's one for cars, there's one for houses, there's one for credit cards, and they all take into different accounts what you're looking to buy. So when you look at your mortgage credit report, when we pull it, you actually have a 45-day window and that's within the Fair Credit Reporting Act to go ahead and shop for what you're going to be looking for in rates and programs, versus the overall mentality of when you're purchasing a car. If you go have your credit pulled, there's possibility you might be taking out several cars. That's why you have your credit basically hurt every single time. Total opposite with mortgages.
Yeah. Cool. And by the way, what is like the minimum credit score to even be, qualified? And if someone doesn't qualify, like have a qualified credit score, would it even be worth speaking to you?
Yes to all of that, right? You should be definitely sitting down. I'll go into a second about that. But with the minimum FICO scores, FHA and VA, you need a minimum of 580, right? You'll hear other places, and we can as well, go lower than that, but you do need, let's say, a little bit higher down payment. So, but just keep in mind, you want to be around the 580. I recommend 620 to get better financing. With the conventional loan, same thing, can go as low as a 620. But however, I do recommend in the situation, get as high as you can. We don't want to be teetering around those lower because financing doesn't look too good. Yeah, right?
For sure.
But on top of that, to answer your second question,
it was, if someone doesn't qualify for that credit score, is it even worth talking to you?
Yes, I highly recommend call me and Julie just to sit down. I always say just get a roadmap, get a game plan. If you don't qualify now and you don't do anything about it, you're not going to qualify later. So what I always say is compare your credit to like your car. If there's something wrong with it, we have to get under the hood, look at it, see what we need to do to fix it, and get you back on the road to where you can purchase.
Yeah, that's a great analogy. I love that. Yeah, so a lot of people always come up to me and say like, oh, my credit score sucks and all that stuff. But I'm just like, hey, look, if you want to start planning now, let's go ahead and build that roadmap, because you need to build a foundation before you can build a house, correct?
Exactly.
So that's exactly what I always tell them. So good. And when a lender does a credit inquiry, are individuals entitled to that specific copy?
They are. This is a trick question though. Technically, I as a lender cannot give you your credit report, and this is just for security reasons. However, if you sit with me and in person and review your credit report, I may so happen to be able to print this report out and show you exactly what it looks like.
Yeah. And so at the close of escrow is the most exciting time, right? Like everyone gets paid and all that. So the loan gets funded and the buyers get closer to their keys. Let me ask you, what do the closing costs include? And on an estimate, like how much should people usually budget for that? Okay,
so on average, your closing costs are going to be around 2 to 3% of what the purchase price is, right? And that's a gray area as well. Might be a little bit more, might be a little less, just depending on areas and taxes. But what your closing costs do consist of, there's several items. There's going to be one, your prepaid. So you always pay your prepaid interest up front. So if you're closing on the 30th of the month, you're going to pay 1 day of interest. And if you close on the first day of the month, you're going to pay 30 days of interest. So that's one thing as well. Another thing is if you choose to impound your escrows, so if you choose to include your taxes and insurance into your monthly payment, that's something we can collect up front. Obviously, if you have 20 or 15% or more on your down payment, you have the option to waive your escrows. So that's where 2 and 3% might be a little different.
Yeah.
Third, we have your escrow and title fees. So basically all the necessary transactions for a loan to actually go through. That just varies on the selling agent as well, because they are the ones that determine who your escrow and title company are.
Yeah.
Right. And aside from that, you might have what are called points. That's up to the individual if they want to buy down their interest rate. But that's a whole other conversation you have to have as far as
we'll
with that.
We'll do another video on that. If you guys would like to know about that, give us a call. We'll explain a little more about it. Or we'll do a video. Just stay tuned.
Yeah.
Awesome. And now the big question. Are you ready for this?
I don't know.
Do you need a 20% down payment in order to purchase a home?
You do not. You do not need 20%, guys. I know that's a big number of people try and go on, and they get misconceptualized thinking 20%, you don't have any PMI, right? The minimum you need, for instance, on a conventional loan is only 3% down.
How much was that?
3. Tres for my Spanish speakers. 3. FHA, you need 3.5% down. And I had mentioned that word PMI. There are some options where if you only come in with 10% down, you have great FICO, we might be able to work a situation out where you don't have any PMI. So don't be misconstrued and let 20% deter you from actually buying.
No 20%. Great. And so, Anthony, do you have like a shareable list of documents where I can share, or you can also share with anyone out there who's looking to purchase or wants that list?
Yeah, definitely. So Julie will go ahead and pop this up on the video right now, and go ahead and reach out to us, send us an email, and I can get documents to you for your specific situation.
Great. Yeah, well, there you have it. If you have any questions, call me below, and I'll go ahead and leave Anthony's email here as well. And then just go ahead, give us a call. It'll never hurt. Even if you're thinking about it in the near 3-5 years, give us a call, because it's always good to start planning now, right?
Exactly.
Great. Well, thanks again. Remember to like and subscribe and comment any questions that you have, or again, DM me, text me, call me. Same with Anthony. Yeah, well, thanks again so much for being here with me, Anthony.
Thank you so
good.
much.
Awesome. Well, thanks again from me and Anthony. Bye. Till next time. Hey there, and welcome to my very first interview. Today we have a very special guest.